Okay, the UCO. I'm back on the UCO. So I did a little review of an article about the USO, which is the future contract ETF for the spot contracts for barrels of oil. Um, but this is the UCO is not an ETF. It's an ETN, and it's a 2x levered ETN. And if you read about it, it says that it's a geared you know, product that's designed for holding for 1 day, and it's supposed to do a 2x tracking of the WTI crude oil, the West Texas crude index, and this is the Ultra Crude Oil UCO from ProShares. And I just wanted to I've explained kind of the compounding effect where you lose percentages on volatility over time to compounding, and also the effect where when you have a product that's designed on futures contracts, you can get the contango effect where when you're rolling the contracts over to the next month, you lose more than you should buying the new higher contracts because the prices will drop near the end of the contracts. So you have the compounding and the contango effect. Just as basic concepts, that's one thing, but look at this freaking chart. This tells you everything. So this is Brian Lewis with MMT Investing, and things just changed. So first of all, crude oil leading up to the financial crisis, I mean, it went nuts, and it was up to like 150 a barrel or something like that. And this product started during the financial crisis, which is an unlucky time, immediate crash. But let's just go down here to the bottom. So off the bottom of the financial crisis, the crude oil prices went way up, like 2 or 3x, depending on which oil you're talking about. But I mean, the crude oil went like this, like it went nutty upwards. The prices of oil went up, and look what this UCO did over the same period of time. Didn't go up. It's flat. I mean, it's volatile, but you just lose your money in the volatility and in the futures contracts because of the compounding and the contango. And boom, it's flat over this huge gain in oil prices over a long period of time, and it just comes out flat. And this is the same thing we saw in that article that was talking about the USO, but the UCO has the same long-term chart. And then we get the crash here. And when oil crashes, this thing crashes with it. But then we get another period here from 2016 to 2020 when oil was way up again. It went way up, leading up to like December 2019. And this is what the UCO looks like over that period of time. Just flat. And that's the chart. That's what you get. I mean, maybe a little volatility, but overall, during a huge uptrend in oil prices, this thing is flat, and then the downtrend gets a crash, and then the uptrend is flat. And so, for people that are trying to use the UCO or the USO to track the uptrend in the oil price over the next couple of months, um, it does not track the oil price over a couple of months. Like for intraday trading, you can use this if you expect a big up move or something. But really, based on this chart, the only time this thing looks useful to me is if you can spot somewhere to short the thing where it's going to go down. Like that'll happen. And it's very little risk of it actually going up. Um, so not for call options probably. If you could just actually short the thing and just hold on to it, it's either going to go sideways or down, it looks like. And I don't know if there's another down coming, but it doesn't look like there's much of an up coming on this thing ever. I mean, if you get an up, it just comes right back down to that flat line, and that's what it's doing here too. So that's the UCO, and oil prices are going to go up, but UCO is not gonna get the gains on the way up. It just doesn't work like that. It's one of these levered, ETN products that has compounding math and it has futures contracts that roll over. And every time a futures contract rolls over, you lose money. And every time the daily compounding math happens, you lose money. And this is what it looks like. This is the result. You get the crash, and then you get flat, and then you get the crash, and then you get flat. And that's UCO and USO have this kind of graph. And I was just kind of talking about it, but I didn't actually pull the graph up and show it. But if you get in here, let me zoom into the dailies and let's look at it closer. Okay, here's a good example. So I have the red line here is the actual WTI crude oil prices. And if we pick a starting point to line them up, let's pick the beginning of the crash here. Where is it? Here? Okay, so let's line them up at the beginning of the crash and take a look at what the actual price of oil looks like and what the UCO does in response to that. So when it comes down, and then when it goes up, it doesn't go up so much. It just keeps falling and falling and falling. And now you get this rebound in the oil prices, this is that insane negative oil contract contango here. And you get a rebound out of here with the oil prices, and you get no rebound with the UCO. And this is because of the futures contracts and the compounding. It just doesn't go up. Like on the way down, it goes down. Like that's nice. I mean, that's nice if you want to short. Like if you had shorted USO or UCO from the top, it's better than shorting the index. But when the index starts going back up, UCO and USO don't go back up. They just don't. So really the only thing that makes sense to use this for, oh no, okay, let's leave it where it was, is if you see a spot to short it, you can short it and you'll get the percentage gains on shorting it. But just super careful with the rebounds because it doesn't rebound when the actual price rebounds. Okay, so that's just a look at UCO. That's a second look. And just exactly how it works kind of while you're holding it. And I mean, this is zoomed in pretty tight just over the, just over the period here. I mean, these are 1 hour intervals. So, I mean, each candlestick, is 24 of these in just a day. It says don't hold the thing for more than a day, but look at all these gains in oil, gains. And look at the UCO, nothing. Like tiny little volatility is flat. It's just dead. So the downs, you get downs, and the ups, maybe you get a little bit, but you don't get the real up. And then, yeah, I just, I don't think going long on these, well, this is not investment advice. And this is Brian Lewis with MMT Investing, but it looks to me like, the UCO always smashes that like button to help me out with the YouTube algorithm. Yeah, it just looks like UCO is not a tool for going long on prices of oil or long at all ever. It looks like it's only useful for shorting in the rare occasion that you should be shorting something like this, which could possibly be happening again. I don't know. Yeah, this tracking oil's futures prices and they're going up. I mean, yeah, just if you look at the long-term chart, it just says this thing just stays flat when things are going up, and I can't predict any kind of a down move in the oil price. I mean, I don't know what the cyclical data would mean for the oil price. I don't think it correlates like that. So I think that's all I have on this one. It's just, yeah, these levered kind of funds, especially the futures contracts, aren't exactly what people think they're investing in. Like, you're not buying the price of oil, you're not getting gains on the price of oil. This is rolling futures contracts with compounding. And look at these charts before you buy these things. It's not like owning a company. It's owning a geared, levered futures product thing, and this is what you get. So happy investing.